Right, seems like we are all set. So good afternoon. Thank you very much for coming, joining us tonight, today. I see that there is some energy in your faces, so it's good. So because we would like to keep this workshop very interactive. So should you have any questions in between, please join us participating in the workshop. And just one question, how many of you came yesterday afternoon and participated in the programs yesterday? Was many of you? I just see a few of you. Okay, so you mostly arrived today in the morning or yesterday later at night, so you're full of energy. You didn't waste your energy on partying yesterday night. Good, that's even better. So today we will be speaking about embedded insurance, and myself is, my name is Michal Trochimczuk. I am one of, so don't look at my surname Trochimczuk because it's not easy to pronounce, so it's just Michal. And I'm one of co-founders of Solars. We co-founded Solars 22 years ago. Don't ask me where I'm from because I'm homelessly traveling around, but mostly originally from Poland, now based in Germany. And Patryk.
Thank you, Michal. My name is Patryk Nowak. I'm a senior consultant for Solars Consulting, mainly responsible for helping customers with embedded insurance, with implementation of our software. I'm also a project manager of the projects.
Perfect. So today, there are a lot of buzzwords that we keep using, like artificial intelligence, blockchain, and etc. I can name a lot of them. But insurance is a little bit often used as a little bit buzzword as well. So what we would like to do today, we'd like to really define what it is, give you examples from projects, and talk through what to do, what not to do, but with your participation. So we'll be sharing experience from our projects, but more than happy, to hear your view on that, because we do believe it's going to be a big market. So the goal is, when we finish this presentation, it's not a buzzword anymore. So we have a kind of similar understanding. It's a very ambitious goal, I know. Good. Let me shortly introduce Solars to you. So we were founded in 2000 by two guys. I always refer to Marcin. He's short and bold and nice, and I am tall with her and not as nice. And he's more on the French side, I'm more on the German side. But we, at the very moment, became very, very international. So the countries which are white and green, countries where we support insurers on different transformations. And it's very, very interesting for us because we learn a lot. Like 2 weeks ago, I was in Japan. 3 weeks before, I was in Australia. Last week in London. Next week, going to New York and San Francisco. It's so interesting to watch insurance and different markets and differences between those markets, supporting insurers. And we have had privilege working for over 100 insurers worldwide. We focus on insurance, bank insurance, and banking around bank insurance and risk management. So we're very, very insurance guys. And we're not a huge corporation. So this year we will reach 1,000 professionals. And in order to be able to work a local language, we have operations like in France, Paris, so we can work French, or in Japan, so we can work Japanese, or in Germany, so we can work German. But operations are around Polish cities and now bigger Spanish cities where are universities. And what differentiates us is very selection on building the team. So very selective, around 1.7% of candidates make it through the recruitment process at Solars. So this is about Solars, and let's get into embedded insurance. Topic of this meeting. Patryk.
Thank you, Michal, for this wonderful introduction. So I'll jump into embedded insurance, starting from this very beautiful blue slide. That after I click will show a lot of trends, definitions, buzzwords, you may call them, as Michal mentioned, all, to my opinion, somehow related to embedded insurance. So let's try to structure it a bit. So embedded insurance is about selling insurance products together with non-insurance processes or products and services that are being sold elsewhere. The quest here is to be fully digital, But as the market is on its entry stage, you will find different, let's say, levels of embedding. You may have a simple link that will redirect you somewhere else. You might have so-called soft embedded, so you have to opt in, hard embedded, you have to opt out, or invisible embedded. So there's a lot of topics going on the market, and we will try to cover them today as well. Embedded insurance is part of embedded finance, which also includes embedded lending, saving, and embedded payments. And I like to think about open banking and open insurance as sort of enablers. It's not only about banks and insurers getting their APIs ready to be exposed to an external world, but it's also sort of an eye-opener, a change of mentality that, hey, the data is not anymore only ours. Of course, open banking is much more regulated than open insurance, but open insurance is catching up, and first regulations are appearing in the world. Ecosystems, B2B2C, bancassurance have been with us on the market for a long time now. Insurers gaining experience, learning how to do partnerships, how to manage the topics of distribution partnerships, and embedded insurance is learning also from it, gaining faster pace. So the market potential and examples, you have probably already came across a couple of numbers related to the market potential. The first one I like to stick to because now the numbers are rising. So the first one, that Simon Torrance, a person who first did this market analysis on the market potential of embedded insurance, claimed that by 2030 the market will reach $700 billion GWP in P&C alone, which when we think about can be treated as inspirational, but when we look at more down-to-earth numbers, we will see that as Open and Embedded Insurance Observatory that Solers is a part of surveyed or analyzed $900 million of investment in embedded insurance, insurtechs already by the end of first quarter 2022. So it kind of shows the potential, but let's move to the market shares, market sizing.
Just one thing for the British colleagues, UK is surprisingly part of Europe, so that's
embedded insurance, we may say on this stage is dedicated to products from the let's say P&C lines or personal insurance lines, rather easy products that can be sold in a non-insurance process, not affecting the conversion rate of the distributor. And as Insurance Innovator Reports claims, in a couple of years' time, 57% of travel insurance, 42% of motor insurance, 38% of pet insurance, and 29% of household insurance is going to be sold via non-insurance platforms. So it shows the potential, but what's so alluring from the perspective of insurer? As Open and Embedded Insurance Observatory revealed, 100% of insurers claims that embedded insurers will let them reach new revenue, meaning reach new target groups, probably ones that would be not be possible or would be very costly to reach with existing channels. This is probably one of the reasons why embedded insurance is considered to be a tool or a trend to cover the insurance gap. That's why the potential is growing so heavily in some sources. Secondly, 60% of insurers think that they can leverage on the data, totally new sets of data that they will be getting from the partnership with a distributor. This on one hand is an opportunity, but might be considered as a challenge by some insurers, as this requires some new data competency to deal with this, with those new sets of data. To give you an example of one of our customers, there is a big e-commerce platform, let's call it a Polish eBay, to have the imagination of the brand. And they are providing buy now, pay later solution to their customers. With buy now, pay later, there is a PPI insurance to cover the risk of the loan not being repaid. And the underwriting for this model is pretty interesting, because when they all have it in-house, they can use all the transaction data that they have with customer, all the relationship they have with their customer, to come up with a risk decision-making process to grant them a piece of revolving loan that then can be used in the process. Lower distribution cost, 50% of insurance think that embedded insurance allows to lower the distribution cost in comparison to other channels. We know that in insurance, basically, the cost of acquisition of a new customer is one of the highest out of the markets. Of course, here you could argue that there is a commission that we need to pay to a distributor. And sometimes the commission is pretty high, which is true, but this should be considered in a broader sense, also taking into account renewals, upsell, cross-sell to the customer that we already have gained contact with. And last, and least in this case, because only 30% of insurers think it's alluring, is that having this partnership with usually digitally native company will allow them to get new experience, new know-how with relation to digital sales, and also the brands that the insurers will be cooperating with have strong level of trust, thousands, millions of transactions with their customers, great touch points, and great history of loyalty. So they believe they can leverage on that. For embedded insurance, there always is, of course, a market, be it travel, mobility, gig economy, healthcare, whatever group you may think about. Then there's a distributor, so a company that has got an extensive database of customers, or has got a database of customers that are quite niche, that are oriented around specific needs, and that might be considered by insurers as an attractive partner to sell insurance in the context of the sales of other products and services. We're of course not gonna be able to cover all the examples here. This is as well just the top of the iceberg. By the way, just an announcement. Anyone who would be interested in getting the presentation, please reach out to me and I will send it to you via email. No need to do pictures or notes. I will send it to everyone interested. The examples of embedded insurance are appearing every day to me. It's like something that insurers really need to start doing fast, because otherwise they will lose a piece of ground because it's being covered by others. The first deals were big in multinational or international, we may say. There's this insurtech Cover Genius who's doing a really great job on the embedded insurance market. I've seen in the booklet that there are guys from Wacom on the event in Monte Carlo. I'm not sure if anyone is here. Wacom, by the way, the French insurtech, is also doing a great job when it comes to embedded insurance. So this you might have come across. It's simply adding insurance to the process of purchasing a travel ticket, a plane ticket, and travel insurance. But what's really compelling about it is that the results that Cover Genius is achieving with over 600% increase in sales in 2021, over 10 million policies sold, and for retail customers, a bit due to the pandemic effect. In 2001, they have reached around 2,000% increase in sales through retailers. Another one would be more local or more niche, let's say. This is my favorite one from Kangaroo, a US company who is selling home security appliance. To me, this is like the essence of embedded insurance because the value proposition is really easy to understand and really compelling. This is the more secure your house gets, the bigger discount on insurance you will have, and it's fully embedded in the app when you purchase, when you go through the security appliance purchase process. So Kangaroo is noticing really high attach rates, is 50 to 70% attach rates on their products sold. They're also starting to experiment with telematics and motor insurance, but this is probably going to be the future. And what's also important here in this case is that they have a dedicated team of people who are supporting insurance partnerships and insurance sales only. So there's a clear strategic focus from them to exploit this piece of market. And
Iduna, it's another example of insurer. It's a German insurer. They're strongly present in some Eastern European countries, and they were not really so much in property casualty insurance. So what they're looking at, they were looking at, it's like there are a lot of shop chains. So the chains of the shops selling different values. So the different things like watches or glasses or you name it. And they were wondering whether they can help them increase profits by offering insurance. And the first were shops selling glasses. And what they offer is the glass insurance. And what's very, very interesting to watch, because at the very moment they're selling insurance in 141 shops. And when we see the attach rate, it's around 13%. So 13% of customers buying glasses buy insurance as well. And it's also very interesting, we'll be later sharing with you what's very important in the design process of embedded insurance. But at the very beginning, this percentage varied between shops quite a lot. So there's several things that are very, very important, how you design the process to make it successful. But they started with the glass insurance, and they're doing that very, very well. Now they are going into the watch insurance, so the shops selling watches, and actually they are very advanced in discussion with the furniture insurance shops. So, and this is working pretty well. But that's very much depends on not only the knowledge from the insurer side how to design a process, but also readiness from the partner to design the appropriate process. And how we'll show you at the moment. Another example is from Germany. So, that's what I described to you is like, it's a great pleasure really working with insurance different words. And I'm a big fan of Germany. But when I went to Germany, I was shocked. So the first shock was like when I was ordering through courier, and I found out that the courier is going to arrive home on Tuesday, somewhere on Tuesday. So I said, okay, I'm working, so can you tell me what time? And they said, no, on Tuesday. You need to be on Tuesday at home. And on Tuesday you will get your package, right? So this is the way how it works, a little bit more relaxed, and the average time of implementing bank insurance product was around 12 months. And so whenever we discuss about time to market, they always say, well, we implement a product, it works and it's profitable. But what happened is, and this is an example of the consumer finance banking. There were new regulations in Germany, and there's much increased competition. The regulation one was you need to separate products with the insurance product information, which changed quite a lot the way German insurance work. And the second is on PPI products, there was introduced a cap for commission. So normally German banks had commission over 50%, and all of a sudden it was capped by 2.5%. So from day one, when for them bank insurance products were very profitable, to day two, when this product became totally non-profitable. And that was not the moment they could act in 12 months. they had to act quickly. So that was kind of interesting. This was there's interesting example of one of our customer where we designed processes before, and their time to market of products is around 2 to 3 weeks time, which is not very German thing. So and then what they did, they very much increased the car guarantee that they were selling, so increased guarantee for the cars, which they were selling loans for. Or the second thing is they increased the number and the coverage of the protection products, and they made it up with those products very, very quickly. So I think that there's one more lesson here about bank insurance. Is I think in bank insurance and embedded insurance, working with different partners, there's one very important thing is to be very flexible and fast, really, in things that will be changing, because that's not only regulation, insurance regulation will be impacting insurers, there's also the regulation of different partners will be impacting embedded insurance products.
Great. Okay, so now I would like to propose you a short exercise. It's not going to be a physical exercise, don't worry about it. It's going to be based on the model you probably all know pretty well, so business model canvas by Alexander Osterwalder. But it will not be to define a exemplary model for a specific product or a single business, but to catch the general model of embedded insurance. And just for the sake of today's meeting, because we are time limited, unfortunately, we're gonna just limit it, cut out the revenue streams and the cost structure. Of course, we would be very happy to discuss them in details, but we won't find time. So let's focus on key partners, activities, key resources, value proposition, customer relationship channel, and customer segments. And starting with customer segments, this is about the jobs that the customers are doing while buying something else. So let's make an example. Let's try to buy a bicycle online. So we have chosen a brand, we have chosen a color, we have chosen the equipment. It's already in the cart. Let's say it will cost 2,000 euro. What might be your ideas for in the context of insurance? While buying this bicycle, what this customer might be also thinking about in the context of insurance? Would you have any ideas? Accident. So he might be afraid that he will have an accident. Anything else?
Damage to the bicycle.
Damage to the bicycle, theft. Okay, great. So this is what can be summarized in general terms as he would like to do his job of minimizing risk related to purchase of this product or service. So we're gonna have the context. So what can be the pain while doing the job? So while trying to minimize this risk, what can be something that would make him not doing the job? Price. Okay, any other ideas? The process around it. Okay, good. I have added some topics. I can be adding more to make it more more complete. What I thought was time needed to look for a suitable insurance product. He's already there. The bicycle is already there. His personal data is already there, as he's already in the cart. It's also about the need to provide same data again, right? So it's about the easiness of the process. So the customer segments, they just correspond to value proposition, and it's about adequate insurance offer. And the keyword here is adequate. As we experience in the projects we are doing, and in discussions with a lot of customers we talk about embedded insurance, it really is a key not to just take the product out of the shelf and try to push it to the distribution channel. It's about partnering with the distribution partner and figuring out, even analyzing the market, doing market research to figure out what the customers really want. And to address those pains, we need a hassle-free purchase process. And as I said at the beginning, it would be great to have one click, probably 2 clicks, but sometimes, and especially on this stage of development of the market, there's even human assistance, so there's an agent who has got it digitalized in his front end, but supporting the customer. Okay, so about customer relationship, this is about the touch points. So parts of process that are touching the customer directly. Who do you think is the owner of the relationship in the embedded insurance model?
I would think we would have to be the insurer, at least in the US.
The insurer in the US, okay. Any other thoughts about who's managing the touch points?
Customer himself.
Okay, customer himself, but exactly. This has to be maintained by the distributor. Well, it doesn't, maybe it doesn't have to, but it usually is, because we need to remember that we're embedding this insurance to the process on the front end, not on the distributor side.
The retailer.
Excuse me?
Retailer.
It might be a retailer, correct. So the retailers, e-commerce especially, they are obsessed about conversion rates. So there cannot happen anything that will break their conversion rate. They're also obsessed by consumer data. They want to have all the data on their site. So I'm sorry if I'm covering the screen for some of you. Please just let me know. So we need to establish a partnership full of trust and real cooperation, so that we as insurers can actually influence the process. We can influence the touch points. Of course, we will be the ones probably covering the after-sales topics. So this will be our touch points. But here, when we focus on sales, this is mainly maintained by and owned by the distributor. What kind of channels can we have in for embedded insurance?
Regulatory compliance.
By channels, I mean channels of interaction with customer.
The shop itself is selling.
The shop, okay, and
Definitely is online.
and online. So the opposite order, but it's online sales and personal sales. Of course, if you have any other ideas, something that I should add here, I would be happy to enrich the slide. This is also the first time we're doing this live exercise, so please interact. Great. So thank you for your support here with this with the exercise. And now let's get back for a moment to the slides, and I will give voice back to Michal to talk about strategic steps.
So this is showing about what percentage of insurers actually are working on embedded insurance. So half, so every second. 35% of insurers, they consider adding embedded insurance in their strategy. 15% of insurers, they have not really prioritized embedded insurance. So it's a big thing in terms of the way how insurers thinking about embedded insurance. But it's not very easy to do. So few steps to think how to start with embedded insurance. So first is to select an industry and look for partners. And this is actually very important, because partners have to be hungry. You need to have on the partner's side someone who is really looking for revenue. And if you have partners who have a very big customer base, and then there are a lot of utility organizations which have a great customer base, but are not hungry yet. So it's very important not only to look after customer base, but also the level of energy on the other side. And then the second is to look for the use cases. So where, in which process, you could potentially embed insurance. Where and normally it works this way, that when it doesn't bring value to customers, it probably will not work. So it has to bring value. And this is a little bit vicious circle, because here, when you look at the use cases, there's always a vicious circle with anti-selection, because when the customers select themselves, then there is potentially higher risk. So in the process, you always need to think how you can address the topic of anti-selection. This is, for example, like the example of the bicycle insurance. So, for example, like in Germany, I'm based in Cologne. So normally you lose bicycle every 5 years. When you cross the Dutch border, you normally on the Dutch side you lose bicycle every second year, right? So the question is, when you decide to insure bicycle and you decide yourself, the risk of anti-selection is high. How do you address this? And this is more, the smoother it is embedded in the process, the more percentage of customers buy it, the least anti-selection. And then afterwards, looking at priorities and of use cases and partners. So to see, hey, this use case might work, and it might be enough profit for you and for the partner, because what's very important at the end of the day, this is the two parties that need to have profit from that. And then decide on the short list and build value proposition for end customer. Why this end customer is going to buy it. And that's also a very interesting point. This is establish business model with a partner. And this is very tricky, especially because when you have a search online, it's probably easier because you look at the process and conversion ratio, but it's a little bit easier when in this process there is a search professional from the partner involved, because this search professional has to be incentivized. And where a lot of embedded insurance projects fail is that there is a human being on the partner side that needs to sell this insurance. And this person is not incentivized. And everyone is surprised, it's not working. Well, it's not working because this person is not incentivized. So, partner wants to have the whole commission without sharing this commission with their employees. But if they don't share it with their employees, then they're not going to be successful. So this part is pretty important to really understand why this person on the partner side would sell this policy. And then afterwards, set up technology requirements. And this is again tricky, depending on the partner. So we all know insurance is a very conservative sector. But there are more conservative sectors in insurance, and those are banks, for example. So when this IT person from insurance is talking to IT person from the bank, they can talk about security forever, right? So it's very, very important to think on technology and platform, how you want to connect, whose data is there, and legally, who owns which data. But here it's to really set up what are the requirements, where a partner is picky about. When you talk to telecommunication company, they have huge volumes. So they never ever allow insurer really going to billing. So you need to get outside billing. When you talk to bank, they never allow really to get to the data, right? So that's to see what are their requirements, what are our requirements, and then to transform it into a platform and establish, once you have this platform, an established partnership, you normally will never always be successful, and so it's good to have a try. We call it minimal valuable product, and to be prepared that you might fail with this product, or you might learn what you can do better. And this is also difficult. I do remember many insurers saying, "Hey, agile is great." And insurers, decision makers talking to the team, agile is great, but you should never fail. But you can be agile, right? So in here, you need to get prepared, you would be failing, but you need to fail very fast and fine tune. So for example, like, is incentive, the certification program for the partner employees sufficient? Is this process smooth enough? Do you edit the right moment in the search process that more percentage of customers decide for that? And there's one customer where they're also using chatbots for that process, and they analyze at the end of the week the process and where customers don't decide, and then they learn and they do small adjustments in the process. So this is the minimal value product. It's very, very important. And then afterwards, you need to make it big. So scale up, and just be happy from a successful embedded insurance. So what you need, you actually need a partner, hungry partner, ready to work with you, right products, and technology, and that working together, and mindset that you might not be successful from the very beginning, that you would be failing a little bit in order to be successful at the end.
Great. So let's get back to the exercise and fill in the key partners area. So this one is very easy for the first partner. So for the insurer in the embedded insurance business model, who would be the partner? The distributor, right? So this is the first one. Then we might need some other partners, not necessarily. Okay, I'm not sure who of you that was supposed to, there was supposed to appear the logo, but okay. But here, to be honest, there is Open and Embedded Insurance Observatory who has named the 3 enablers. So there is a distributor, of course. There is a technology supplier, so someone who will provide the technology. So Solers, of course, let's make it clear here. And there's also data analytics providers. So the enablers who will support us with this new sets of data, underwriting. We have had a presentation, I know whom of you have participated just an hour ago, from a provider of data analytics to risk assessment. Of course, some of you might name other key partners that might be essential for you to establish the embedded insurance model, but we think these 3 are the most important. Unless you have some ideas right now, I would be happy to add them if you have any. Please go.
Just in the spirit of brainstorming, when you talk about 5-year cycle of loss, 2-year cycle of loss, mechanical loss, maybe actually insuring a lock as part of the sale might be an interesting.
Okay. So yeah, this would be here, right? So we have, if I understood you correctly, we would have a bicycle. We would also have, I don't know, ABUS is ABUS, right? Is one of. And we can have a lock for a bicycle, so that we can have a lower a discount on insurance if if the lock is very safe. Absolutely, this is about building this value proposition here together with the partner. Maybe we're gonna have a third partner, right? So we would add another key partner here. We would have let's say 2 distributors and an insurer, right? So this would be like a development of this model. Absolutely.
I think the type of embedding also is very important. To go into compulsory embedding, that's much work to be done. As soon as it's compliant and legal, you can proceed. So, but you come to the voluntary offerings.
Yeah.
So from the cost of acquisition point of view, you need to be very careful with how your end results going to be, right? So that's one main challenge in this.
Yes, it's good you're mentioning the, let's say, the legal aspect. I know we have lawyers here in the room, and there was also a legal aspect mentioned for the US market. So this is like a different area that should, of course, be covered by embedded insurance. Sometimes there's just a group insurance underneath the embedded insurance, so that people just sign in for a group insurance, right? But let's keep it different. Okay, now let's move to key capabilities and success factors. We still have some time for discussion, so don't worry. But I'll discuss the next topic. So from the functional perspective, the capabilities that are essential for the embedded insurance strategy. So like the strategy that was described by Michal is basically we need to have competency or capabilities in the pre-sales. So this whole scouting topic, delivering or defining a viable business case, finding money behind it, scouting for the right partners, getting into discussions. That's why for Kangaroo I said that it's really important to have a dedicated team of people who will be doing it. Like I've just talked to my colleague from Generali Italy, for example, in France they have 70 people dedicated to support the B2B2C model. So it's like once you have a clear strategy, you're gonna find a way to do it. Then product. We have discussed a bit about pricing. It's about, of course, creating this product from the business perspective, from the technology perspective. It's about data sharing, so about data management for the product, for the definition of the product, for its analysis. And after sales, so we have the whole insurance value chain covered. Here, after sales are usually gonna still be on the insurer side. However, as I said, some e-commerce, especially distributors, they, for example, want to have a customer portal where the customers can see their policies. They want to track it. They want to do some good things to their customers. That's why they do it all in their portals. But what's important about this one is that we need to be ready for ongoing alignment and testing. We cannot underline it anymore for the projects we did with our customers. The changes, we went live day one, and business assumptions changed day two when the sales started. So we need to be flexible to change it. From the technology perspective, we need to have a platform that will allow you to configure the business logic, that has to have an insurance business logic inside, and be also ready to expose this logic in different ways, because it's not only about APIs. And those APIs, I mean APIs that can be externally released. For retailers, it will be high availability. It will be 99.5% yearly, right? So very small time for defaults, for problems, for technical problems. And also the volumes are gonna be very high. There are thousands of transactions per minute. So we need to be ready here. But not only APIs, also sometimes we need to quickly configure sales portals so that the distributor can use it if the distributor is not as digitally advanced. Or we can have our own front ends, but embed it into an external front end so that it's fast, no integration, just embedding and launching. To finalize our canvas, I will first display the key activities because they are not that obvious when it comes to this general model, but it's researching the markets and scouting for partners, building value proposition, and starting small and scaling while the business grows. Those I selected as one of the most important activities for embedded insurance. Would you name any other? Would you change them? Do you agree with those?
Embedded insurance particularly, we need to think much more about the customer, like the personalization of the product from a different perspective.
So it's like
keeping it as if it is sold throughout the insurer.
So you would add consumer insights here. Consumer insights. Okay. Let's do it.
That's fine.
We're gonna add it. It's supposed to be a workshop, right? Okay. Yeah, now I've covered the key resources. That's a signal that we should do key resources now. So for key resources, what kind of things an insurer might need and let's focus on things that we might be missing currently. And the answers you're going to be giving are, of course, not going to be about your companies if you're an insurer. It can be about any general company. What do you think, what kind of resources insurers might be missing now to be successful on the embedded insurance market? Michael?
Dealing with the data and privacy from customer
Oh.
information side.
Okay, it's legal capabilities, let's say competency when it comes to privacy rights. Okay, anything else? Claims. Okay, about claims. If we are an insurer, we should have an effective, efficient claims process. It doesn't matter in which model, right?
I mean, historical claims data of specific.
Oh, okay, historical.
insurance
Oh, okay,
product that
okay,
will embed
okay. So, okay,
into
I get it now.
kind of
Okay, okay, okay.
What about the ownership of the, it's not easy to, when you have a larger partner, to execute any embedded model, it's not the easiest thing unless you have right ownership from the both side or whoever the people involved in the process.
Okay, so you mean like a buy-in in the organization to actually do it?
You said that.
Yeah, yeah.
This is much more than buy-in what he's talking about, because this is really a key success factor. It is like the communication, or much more.
It's
Like
one, yeah, exactly. It's like who does what, right?
Who does
And
what,
then
you
you
know?
have the right people on every end of the
Okay.
ownership to own that kind of responsibility to execute it end to end.
I think this is pretty important. Okay, what I had here, sorry, is the technology that is pretty specific here in this case, and as research shows, like 40% of insurers currently have those APIs that can be exposed, but also the investments is pretty heavy here, and by 2030, 80-90% of insurance will have it, so this will be probably covered. And I think this is what you referred to, so it's the dedicated team to support partnerships creation. We have also legal competency needed, and we have the claims history to underwrite the product, right? If this is what you meant.
Yeah.
So thank you for this. We have finished the exercise. It was pretty interesting to discuss it with you. Now the last part before the summary, so key risks and challenges.
So, interestingly, if you look at how insurers assess how easy it was for them to construct embedded insurance, 9.1% they say it was not really difficult. And then it gets worse and worse. So over 70% they're saying it was very, very hard. So it's a hard process to implement embedded insurance. Distributors saying the same. It's only 3 out of 10 they establish partnerships embedded insurance without major problems. So there's always issues. And would like to share with you why we think those issues arise and what to do to minimize it. So first is insurers often looking at the partnerships, embedded insurance partnerships, to sell their ready products. So they say, hey, we have this great product. Let's look for the partners, they're going to sell it. It's easy because the product is ready, just sell it. And this is not the right mindset. The right mindset is to go through the whole process and design products to define the business value for the end customer and prepare it for the process. And then assess the risk associated to find out what is the anti-selection and how you want to price it. And this is any place, any country, and it's starting from bank insurance to embedded insurance. Because when you define a new product, there will be an underwriting process difference. You need to define this product in your legacy system, or to have a platform for embedded insurance, communicating with just information about issued policies. But that's, you need to have a strategy. You need to have a strategy around how you want to define a product, and never ever take your ready product and look at embedded insurance as another partner or channel to push it through. This is like a one top mistake which is done in embedded insurance. Second is lack of knowledge. And this is normally like, it's always nice to watch like 20, 30 years ago in France when bank insurance was starting. There were, insurance companies wanted to sell insurance for banks. Banks said, hey, this is a great idea. Insurance people didn't understand banking. Banking didn't understand insurance. There was not really understanding of one each other. And I see many countries, the same story. So what banks did, they hired a lot of insurance people. They understand insurance better. Insurers hired some banking people. And then all of a sudden started to understand and started to design a different process. And this is the same here with embedded insurance. It's very important not to get in the play and really to explain partnership. What often happens in bank insurance is insurers are treated like commodity providers. So the bank's doing RFP and who is paying me better commission? You, right? And then next year the same. Who will pay me more? You, or you, right? And I think it's a little bit different because you need a partnership. You need a team really maximizing value for the end customer and understanding the whole process, not on the insurance side and on the partner side, the whole process. That needs to be a working team. So this lack of knowledge, this is by, again, selection of partners that are hungry for the business and ready for change. And then prioritization to understand the costs, because that's also another thing. Is insurer understands their cost, partner understands their cost. It's a one business, one product. So you need to understand end-to-end to cost. So that's what we need to understand, that cost, and then afterwards to have a clear benefit, but also clear benefit to the end customer. Why end customer is going to buy this product, right? And one more thing is, well, insurers are not really digital. This is around, the frequency. You have once a year renewal, depending on the frequency of claims, 5-10%, depending on the products, when it's claim raise. So it's not really digital, and insurers will be working with the partners which are much more digital. So this know-how has to be bridged, and this also requires platforms to be able to really have APIs embedded to the product systems. And the next data is pretty interesting, at least for me. So here what you see that if there are, how long it takes to launch embedded insurance products. So these are, this is for insurers that don't have API. So normally when you don't have API, you have two possibilities. Either you make it very, I would say, quick and dirty. So you say, hey, partner, you do everything. You just send me Excel spreadsheet data, and I somehow upload it, and so end of the month I get Excel spreadsheet data uploaded. So there are a lot of models like that. But this is normally uncomplicated products. When you want something more advanced, then you need more communication. You need to find out more about customer, and then you need APIs. So then you see, when you don't have APIs, normally the time to market is pretty long of embedded insurance products. When insurers have APIs in place, then that is very interesting, because for those which normally took a long time, the time to market decreased, but it increases for the first products. And this is normally what we see at our customers. Launching first embedded insurance product takes more time, because you're actually changing your infrastructure, you're changing your thinking, you're building your capabilities to incorporate further embedded insurance products. And then afterwards, the time to market decreases. So there's a certain investment at the very beginning to go there and do that. And I think it's very important to think of this investment here, and then to cut this time even down. And I see, the several customers we're working with, managed to go down to 2 weeks of launching new products. And of course, this is market by market, because for example, like in Japan, for example, if you bring new products, you need 6 months ahead of sales agree with regulator. So then you can't do that in 2 weeks' time. In Japan, you will have minimum 6 months, right? But in other countries, European Union, for example, or US, you can do that much faster, of course.
Great. Okay, so we are moving to the end of our presentation. Sorry for stealing like two more minutes of your time, but we have started 5 minutes later. As I said, anyone who would be interested in getting the slides, please reach out to me. I would be happy to send them. Of course, I will update the key activities and key resources with what we have worked out together today. As our support is concerned, we are a provider of embedded insurance software. So a software that vision is to allow insurers to become this insurtech for embedded insurance. But we would like to be a part of the embedded insurance journey from the beginning. So starting with the research, building the initial business case, defining the architecture, defining functional requirements that are not oversized, that have a good fit for the MVP, then implement the solution, but stay with our customers when they scale and operate further, develop the platform. One slide about our solution. It's already proven in battle on production for over 5 years for Santander Consumer Banks in Leiden, Nacional and Nederlanden. It's a really flexible tool that allows quick adaptation of the products, of the sales processes, exposing the APIs, so it can be installed both for the insurer or the distributor. And by saying this, we would like to thank you very much for the participation in today's workshop. I hope you enjoyed it, and I hope you're gonna enjoy the rest of the conference. Thank you so much.
Should you have any questions from here?
Absolutely. Any questions from the room?
Have you done anywhere internationally?
In
areas like India or other areas?
Other than Europe?
Areas in the Middle East or other places?
We're doing that in Japan now. In Japan. Japan.
You have done in Japan?
Yes.
At the very moment, yes.
At the moment?
Yes.
But not in India?
Not yet.
China?
Oh no, the China is very unfriendly to us. We tried to work with insurers, so no, we
Do you
haven't.
have a team of Indians working with your this technology?
No, the teams at the very moment work out of European countries, Poland, Spain mainly, but there's also a big team in the countries which were marked in green. And out of Japan, for Japan, we are around launching a center in Asia, but it's not going to be in India. Because we need to have a center supporting our projects in Australia as well. Well, Philippines would be a very interesting country for us because they're very, very similar culture. That is, the risk with Philippines is the political situation. We need to ensure continuity to our customers. So yes. We have 3 countries on the shortlist. We are at the very moment deciding. We will decide by the end of this year. We'll be launching our operation in Asia. We are now selecting between Malaysia, Vietnam, and South Korea. So there are 3 countries. So every country has its upsides. And South Korea, very good quality of developers. They have problems with English. Vietnam has more potential. But it's also how to ensure quality. It's not a very easy topic, but we're working on that very hard to kick off center in Asia. Any other questions?
You say you do the platform, technology platform. Are you doing the platform that is both for the distribution of the product as well as for the insurance product?
Yes. So this is a platform which we built several years ago and we developed. We call it Rife, which is in English doesn't sound very well, so that's why we are rebranding, renaming it. But this is a component where you define product and the whole process of sales. And then once you have it defined, then the screens and APIs are automatically generated, and then you change it that way. So this enables business professionals from product departments to define quite a lot. So that decreases the involvement of IT professionals from our customers. So we didn't want to do it very technical about the platform, but we're more than happy to share information more about platform itself. So that's so for example, like those companies which Patryk mentioned, they selected that as their worldwide platform. We're rolling out in several countries. So for example, now we just went live Germany. We are going live soon in Belgium and Spain. We are preparing for kicking off in Norway and Japan. So that's so pretty international.
What's your revenue model?
I'm sorry?
What's your revenue model? Because, yeah.
That's a very, very good question. So we have one customer, and we have agreed with that customer, or one of several customers, that we agreed to go, because we had a lot of discussions between IT and business. And myself, I come from IT and business, but and I love IT because IT is very important. But quite often IT is coming to the discussions and asking a lot of questions. This is API this or this, which is not always very relevant about successful of this whole process. So we had this one with one of our insurer, and so we agreed on a joint venture. So what we do is they are selling, they're creating products. And selling the product, we provide the whole IT and processes, and we are remunerated based on the commission. And it's working for us extremely well. We always wondering. So probably if they were to decide back when we were starting cooperation, I think they would probably prefer the other model. But I think that model we did very, very accelerated discussions because we didn't have IT discussions. We had a business discussion. But for example, at this normally we are partner in business case and provider of services, of IT.
Thanks.
Any other questions? So one more time, thank you very much.
Thank you very much.
Anyone who wants presentation, please just drop a business card or name to Patryk. Patryk will share it afterwards.
Thank you. Thanks for. Oh,
yeah, thanks.
Okay, great.
Yeah.
Thank you. Sorry, I'll just share mine.
Yes.